This week has confirmed expectations, proving to be both eventful and market moving. The Fed announced another 25 basis points rate cut, and the Trump-Xi summit rubber stamped a basic trade agreement, signaling a short-term truce between the two superpowers. This is the week ahead at XM.com. I'm Christina Marujos. With me today is our senior market analyst, Achilles Georgolopoulos. So Achilles, risk sentiment is quite bruised right now after the hawkish Fed meeting, and with no crucial data available due to the ongoing U.S. government shutdown, what could prove market moving for the dollar?
Hi, Christina. You are right. It has been an eventful week with the Fed announcing another 25 base points rate cut, the Trump-Xi summit confirming the improved trade relationships at this stage, and of course the strong earnings, particularly from the tech giants, pointing to a broader outlook ahead. As you mentioned though, despite those positive developments, US equities only managed modest gains this week, potentially raising the bar of what could keep the risk appetite supported going forward. Next week, the focus will be on three factors. One is Fedspeak. With the Fed Chair Powell stating that a further rate cut in December is not a foregone conclusion, essentially opening the door to a debate, it is obvious that there is a bit of a split between the doves and the hawks over what to do next, essentially whether the December rate cut is a done deal. Next week, we expect a plethora of public appearances from both camps, with the doves mostly anxiously about laying the groundwork for the December meeting. The second factor is the US Supreme Court hearing on Wednesday, November 5th, about the legality of tariffs. And this refers, of course, to the tariffs that have started or have been imposed by Trump since April. A ruling is not expected, of course, on Wednesday, and it could take a couple of months for that to be announced. However, since judges are able to ask questions, there could be an indication of what their thinking is about the process, the whole case. In one line, if we don't see the judges grilling Trump's side with questions, maybe they are more positive about not banning those tariffs. Finally, the third factor is the private US data and, of course, the US shutdown. It would normally be a non-farm payroll week next week. However, we don't have any data and the US shutdown is entering its second week. That said, if we get strong private data, the ISM surveys and the ADP employment report, then it could really mean that the Fed rate cut in December is not the main scenario.
Well, taking into account what you already mentioned, it will be interesting to see how the dollar will move in the upcoming week. It will be interesting to see whether it will manage to hold on to its gains, especially against the euro. Now, the 115 level has been hard to overcome lately, so are there any events in the upcoming week that could fizzle out the euro rally?
The dollar has been faring quite well this week, actually in October as a whole, essentially benefiting from a flurry of positive developments, as we mentioned in the first question, and particularly the more hawkish than expected rhetoric from Powell. Positive US data releases next week, with a push to end the shutdown, which the markets have forgotten, but at some stage that will become one of the key factors. Those two together could keep the dollar supported next week. That said, there is a big risk that if tariff headlines resurface, knowing Trump's style of management, that could keep investors away from the dollar, essentially scaring them again. On the other hand, the euro did not really catch a considerable beat after President Lagarde's confident stance on Thursday. Lagarde essentially wanted to be hawkish, but she didn't actually utter those words. Next week, we have an unimpressive data calendar and obviously a flurry of ECB speakers. Once again, there will be a race for the doves to actually put their arguments forward in favor of a December rate cut. But this time, of course, it looks like that Lagarde is not on board with that. That said, dovish rhetoric from ECB speakers will probably keep the euro under pressure, with a drop in euro dollar below 115.72 potentially opening the door to a more protracted sell-off.
Now, let's turn our gaze to the central bank front this upcoming week. The RBA and the Bank of England meet on Tuesday and Thursday, respectively, Achilles. Now, the banks, of course, appear to be on divergent policy paths. So where does that leave the Aussie and the pound?
Yeah, you're absolutely right, Christina. From our side, the RBA is not expected to announce a rate cut, mostly on the back of the stronger Q3 inflation report, which obviously supported the Aussie. On the other side, the Bank of England is kind of split off on whether it is ready or prepared to announce a rate cut on Thursday. The main problem for the UK, the MPC and the pound, of course, is the likely tax increases that the late November budget might bring. And this, of course, means that on Thursday, there could be a push by the doves at the MPC for a rate cut. To be fair, we cannot really exclude the voting shenanigans we had in August, which of course will probably result in the pound essentially suffering. So all in all, the Aussie looks primed to take advantage of a possible dollar weakness, while the pound will probably find it difficult to rally considerably against the dollar next week.
I see. And finally, Achilles, gold is off its recent record highs, and the $4,000 level has been quite hard to maintain this week. What events in the upcoming week could prove pivotal for gold?
The battery for the 4,000 level continues in full force. It's essentially a key area which the bulls made an appearance. So now we're trying, or the market's trying to find a balance. Fundamentally, little has changed recently. There is the lingering concern about the US dollar generally losing its value. There is a concern about the US debt burden continuing to climb. Tariff revenues are significant, but they don't seem to stop the increase in debt. And of course, central banks, mostly Asian-based, they continue to buy gold. Therefore, next week, particularly, geopolitical tariffs could play a key role. Additionally, gold is probably well positioned to benefit from a risk-off reaction. Particularly, as I said, we have lots of negative headlines about tariffs and trade.
Remains to be seen. Achilles, thanks so much. This was The Week Ahead here at XM.com.